bookkeeping if you're doing it yourself. It's not really something I recommend, and that is not just because that I do bookkeeping for a living. It is because when you have a second set of eyes on your books, a lot of times the bookkeeper or the accountant can pick up on things that you may not be aware of. So I always recommend having, outsource that. Call me, I will do it for you, and it's very affordable, and it's really well worth the investment because it's something that I do every day and it's easy for me, and most people don't enjoy it. I have yet to have a business owner say, I just can't wait to do my bookkeeping, this is the best thing ever, unless they are themselves an accountant. And ironically, in a case of, the shoemaker's children are going shoeless, accountants have the worst books I've ever seen. So some 5 tips for entrepreneurs. This is from Entrepreneur Magazine. Rule number 1, and I've talked about this one before, plan for major expenses. I was talking to my kids about things like, how much does a new roof cost, right? And I said, if you save up over 20 years, if you move into a house and you put $5 a week, just $5 a week, even if it does not earn interest, put $5 a week towards a new roof. Figure out the expected lifespan of your appliances and put a little bit of money aside every week for when your appliances go. And then when you need a new furnace or you need a new roof or you need a new computer, the money is there. Also, if most businesses have some sort of seasonal up and down, I haven't really noticed it that much in my business, except maybe there's a little bit of a drop off at the end of the year when people are very focused on Christmas, as far as bringing on new clients. But my clients are year-round clients, so I don't really have a dip in my income. But a lot of businesses do. If you are a boutique, if you're any service business that requires people to get out and spontaneously do things, if you're an auto repair shop, okay, this is something we've noticed. We're having a snowstorm here tomorrow in Utah. It is going to be a doozy from everything I've seen on the weather, and so I'm just about, my auto repair shops are not going to be doing any business. Why? Because that's something people can kind of put off. Even in Utah, with all of the salt trucks and the plows that we have, people don't like to drive in the snow if they don't have to. So in the wintertime, there is a drop in auto repair, and it comes back up in the summer. So one of the tricks is to put money aside in the summer so that in the winter, they have enough to deal with, so they can keep the staff, so that it's just not such a big deal. Things like, they said, put major events like a computer upgrade. You have to buy a new computer every 3 to 5 years. You know this the day you buy your computer. I'm actually past due for an upgrade on mine, because I just haven't wanted to do it. I have everything on this one. It's time to kind of reset this one and give it to my kids or have someone else use it for a while. But you have to acknowledge that there's seasonal ups and downs in your business, and you've got to prepare when money is coming in and things are going really well. That's the time to prepare for your major expenses, so that if it happens to arrive in a downswing, it's not a big deal. And the unexpected always happens. Expect the unexpected. I mean, if you're going to need a new furnace eventually. You're going to need a new car eventually. I keep trying to tell my 16-year-old daughter, I was like, put the money, her car's paid for, her dad bought it for her. And it was really cheap. And I said, put the money that you would be spending on a car payment aside. And in 5 years, you can go buy a brand new car with cash. And nobody seems to do this. Number 2, track expenses. This is kind of where my specialty is. It's both tracking your income and tracking your expenses. Now, the reason people don't like to do this is they just kind of shove it to the back of the desk and say, I'll do it at the end of the year. I have seen so many cases of the shoebox method of accounting, which if you've never heard of that, it means they stick all of their receipts in a shoebox and hope their accountant can figure it out in time for tax season. If you don't keep track of your expenses, you can miss some, and those are all deductions. When I first started doing bookkeeping as a business owner, as a profession, my business partner at the time would, kind of laugh about, every November he'd get his coat out, he'd put his hands in his pockets, and he'd go, oh, receipts that I forgot about. That could have been a tax write-off. Also, make sure that you're not commingling. I have done videos on this before, and I will probably do them again because I see this over and over and over. Get a credit card for your business, just for your business. Don't use it for personal. There's a thing called the corporate veil. And that is what you're creating when you're creating a business entity. A DBA just means that you and the business are one and the same, and you're just using a different name. But if you put together an LLC or an S Corp or a C Corp, and here in Utah, it's ridiculously easy to set up. Literally, you fill out a form and pay $70 and you have a corporation or an LLC. You then want to make sure that your business is its own person. And that's really the best way I can explain it. I've explained it as, I wouldn't go to my best friend and take his money out of his pocket and say, well, I'll just pay you back. We wouldn't be friends very long if I did that, for one thing. And he wouldn't do that to me. So he's a separate person, and he doesn't get to get in my bank account. There's a lot of things that he doesn't get to do because I'm not him. I work with him a fair amount. I enjoy his company, but we are different people with different families, and so, I've laughed and said it's really the same thing. If you wouldn't go to your children and take money out of their accounts, if you wouldn't go to your neighbor and take money out of their accounts, then you also shouldn't be going to your business and taking money out of that account unless you're doing it as an owner's draw. You certainly shouldn't be having your business pay your personal bills, and you should not be paying your business bills. That makes every bit as much sense to me as if I were to call the city of Highland and pay my friend Michael's bills. I'm just not going to do that. I would be more inclined, let's be honest, I'd be more inclined to just give him the money. Not that he's ever going to need it, but if I had a friend in need, I would be much less likely to pay that out of my account than to give them the money to pay it out of their account, because then it's easier for the vendors to take care of it. I hope that makes sense. It makes sense to me, and I'm never quite sure if it makes sense to other people because I know what I'm talking about, and then I'm trying to explain it in a really simple fashion. But once you set up that business entity, your business entity is not you, and you are not your business. And so even though you are earning all of the money, and you are entitled to take money out of your business, you should not be using your business card to pay your personal expenses or vice versa. In fact, it would be really wise. For example, I rent this beautiful home, and my business pays me rent for my office. My business actually writes me a check to me as a person and pays rent for my office. Why do I do that? Because that's a tax write-off. That's why. Also, and once you realize that your business entity is separate from you, then things kind of open up about what you can write off. I could very easily go down to the dealership tomorrow, buy a new car, my car's getting a little bit elderly. I could buy a new car, I could put stickers on it or magnets on it advertising my business. I could then lease it to my business, and then 100% of the miles that I drive are a tax write-off. Some of the other really fun things, but back to piercing the corporate veil, there's a lot of fun things you can do once you understand how the tax laws work. But back to piercing the corporate veil, the reason you set up an LLC or a corporation is to protect yourself from lawsuits, basically. So that if someone were to sue you as a person, they can't get your business, because that's a whole different person. If someone were to sue your business, which is more likely, then they can't get your house and your car and your savings and your 401k. They can only get the business's assets. That's why you set up separate business entities. And the problem that I see over and over and over again is people will commingle, and so they will have these funds intermingled. And when that happens, if you are ever in litigation, the judge will look at your stuff and say, I can't tell where this business ends and you begin. So the corporate veil has been pierced, and that's what they call it. Therefore, you are your business and you lose everything. So I'm really kind of afraid. I have had a couple of clients get sued, and because they commingled, it caused them a lot of headaches. So, please use your business cards for business, use your personal cards for personal. If you need money for your personal bills, you transfer that money over from your business to your personal, take it as a draw, and then you can pay your bills. But don't pay your business bills with your personal accounts. Don't pay your personal accounts with your business accounts. Also, some of the other things that people forget to write off that they can write off are business trips. Here's kind of a fun one. Because I have an LLC, my LLC requires that I have a board meeting once a year. I am the board. So I decided last year that my board meeting would be at Disneyland. And so that's what we went to Disneyland. Now, I don't know if I'm actually going to be able to write that off, but if I were to, say, go with a friend that I also do business with, then I could actually write that trip off, 100% of it, as a business expense and say it was a meeting about business that we just happened to have at Disneyland. Another thing that I always do is if I go to visit my parents, I actually spend some time out there marketing my business in Kentucky. You want to make sure that you're writing this down so that I can say, yes, I was in Paducah and I met with this person and this person and this person and this person, and we talked about business. Now I can write off at least part of my trip. If I'm really smart, I will probably do something like have a seminar on QuickBooks in Paducah, Kentucky, sometime in the summer when the blueberries are in. And I will go to Kentucky, I will have my seminar, and then I can write off the whole thing. But you have to be very, very, very careful about how you do this. And this is where it's very important that your business and your personal stay separate. Anytime you meet with someone, you want to write that down. You want to make sure that these are in your planner, whether it's a paper planner or in your Google Calendar. I tend to use Google Calendar for everything. I really say this is my brain, and if it's not in here, it may not happen because I am so dependent on, I get so wrapped up in work that if I don't have a reminder come up and to tell me that I'm supposed to be somewhere else, then I forget. But this connects. I've connected my Google Calendar with Toggle, which is what I use to track my time. And I use Zapier to automatically bring everything over from Toggle to Google Calendar so that if anyone ever asks, I have everything in my Google Calendar. And probably going back 7 or 8 years. So I can go back and say, okay, well, I was working on this client at this time for this duration. And it's very easy for me to then go back and say, I met with this client or this person at this time for this long. Once you get that, really, if you're ever audited, then you have some substantiation. Also, when you're preparing taxes, now I don't do taxes. I'm going to really just put that out there right now. Right now, I do not do taxes. I do not know if I will ever do taxes. It's kind of not really my thing. But I'd like to keep up on the tax laws so that I can tell my clients this is a tax write-off and this is not. So a lot of people will say, well, you know, I drove 12,000 miles this year. No, 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 no. You drove 12,892 miles this year, because the IRS will see those round numbers and go, nobody drives 12,000 miles exactly. They make that up. So, but you want to be able to substantiate those. I've heard of people that will actually provide a link to Google Maps for every trip that's a business trip. Instead of trying to remember to note it down, because it's hard to, I mean, when you get ready to go somewhere and you're just telling Google, navigate to such and such a place, you can link to that, and that will help substantiate your mileage for your business. Like I said, there's also ways to write off 100% of your miles, but you have to be careful with that. Because, yeah, I mean, when you get in your car to go somewhere, you might remember to say, oh, okay, Google, navigate to, I better be careful with that, Google's coming up. But you'll remember to say, to navigate to such and such a place. But you might not remember to write down your mileage. But as long as you're keeping track, and that your tax preparer will or it should ask, is this written down? Helpful hint number 3, record your deposits correctly. You don't want to pay taxes on money that's not taxable. As a bookkeeper, you know, especially as a third-party outside bookkeeper, it gets frustrating for me when, you know, I'm at the end of the year and the business owner's saying, that's too much income. Well, where did that come from then? If you're saying that half of your income wasn't even income, where did it come from? You have got to, you know, when you're depositing money into your business account, as an outside bookkeeper, I will assume that it's all business income unless I'm told otherwise. So it's important for you, you know, if you get a loan, you need to tell your bookkeeper. And you need to note that somehow. That, yes, this is a loan. This was not my money. This was not business income. Because I don't want my clients paying taxes on funds received from a loan. That makes no sense. But, so when you make any deposits that are not business income, it's important that you make sure to document that so that your bookkeeper knows. So that we can, for one thing, if it's a loan, we need to record the liability that goes with it, and to make sure that you are not paying taxes on money you didn't actually earn. And speaking of taxes, helpful hint number 4, remember how we talked about prepare for major outlays? Taxes is one of those. I would strongly recommend that you have a separate account. It can be a checking account, but separate, just for your taxes. If you end up not using all of that money at the end of the year, there's your refund. You've already got it. You don't have to wait for the IRS to send you any money. It's already there. Make sure you know, you as the business owner, because really you're the one that's on the hook, not your accountant, not your preparer, not your bookkeeper. You are on the hook by the IRS to know when your deadlines are. If you are a corporation, or a partnership, your first deadline is March 15th. If you're an individual, sole proprietor, or a single member LLC, or in other words, if you file your business income on your 1040 form, your deadline is April 15th. If you file an extension and you're a corporation, it goes to September 15th. in an individual extension expires October 15th. So there's 4 dates right off the top of my head. It's just as important for the business owners to know what those are and to prepare for them, because as a bookkeeper, I can tell you how much you're going to owe or how much I think you're going to owe, but I cannot save that money for you. And you cannot, I have yet to meet a business owner that just has 15 grand in their back pocket to spend on taxes. You have got to systematically put that money aside every deposit, every time you get paid. Pay yourself first. This is my big thing that I keep telling my kids. Pay yourself first. Pay yourself 10%. Put that in savings. Put another at least 10% in savings for the government, and then live on the rest. If you do that, you won't have any big problems. I have spent a lot of time and earned a lot of money, sadly, trying to undo and fix other people's mistakes where they didn't account for taxes. Especially payroll taxes. Oh my gosh, payroll taxes are just awful. So make sure that they are getting paid every single pay period. You can do a deposit for your payroll taxes through, it's called EFTPS, which means Electronic Federal Tax Payment System. Ooh, I remembered that. And you just go online and pay them. And then you don't have to worry about the IRS coming back saying you didn't pay. They are not known as a very forgiving organization. And number 5, keep a close eye on your invoices. One of the rules for business owners is you want to pay as late as possible and you want to receive your money as quickly as possible. So one of the things that I've seen and I've commented to people, you want to make it as easy as possible for people to pay you. I get paid through an automatic bank draft that I initiated. It just comes in every week, and I know exactly how much it is. I know exactly what clients I have. I know, so I have no accounts receivable. In other words, if I have a client that's behind, then when they go to cancel, I'll say, well, you owe me for another week because, you know, you had some bounce checks. But I really don't fret about that too much. But you've got to have a collections process inside your firm, especially one of my first accounting jobs was in collections. It was soft collection. I worked at a major hospital in Kentucky, and my job was to bill the insurance, bill the secondary insurance, and then bill the patient for whatever was left over. And then when I came to Utah, I had a job where, you know, I was to bill these businesses, which were vendors. They would purchase product from my client and then pay later. And you know, I was the credit manager, so I would approve their applications if I felt like they could be approved. And then I would also follow up on these invoices. And if they were more than 60 days late, by the way, if you get to 90 days or more late, by 120 days, your debt's uncollectible, almost certainly. So you want to make sure that you are following up at least every 30 days. And you should be getting paid within 30 days. If you start to go to 45 days and you're not seeing any funds come in, that's when you need to start picking up the phone. Because the longer you let those invoices go unpaid, the less likely it is that you will be paid. And you need to have a plan for that. What happens if you're 30 days late? Well, do they get another invoice? Do they get a statement? Do they get a reminder? I actually would have a plan all laid out that 30 days I would send them a letter. A very nice letter, because I found that you catch more flies with honey than you do with vinegar. I would be really nice to them. And I would be, I'm sure you overlooked this. I know how easy that is, but could you please send a payment? And I would do the same thing when I got them on the phone. I'd be, I totally understand. I'm not mad. I mean, nobody's mad at you here. But this needs to be taken care of. When can we expect a check? And because I was always very sweet and very, very nice about it, because I do know what it's like to be on the other side, I ended up collecting over almost $500,000 of what they previously had considered uncollectible. But I had a plan, and then I worked that plan, and I knew when the second invoice went out, when the first reminder letter went, when the second reminder letter went, and when the letter to send them to a collections agency went. And we had a collections agency that we worked with. So, you know, it was pretty quick. If I felt like they were calling me back, if I felt like they were answering the phone, if I felt like they were making an effort, I would never send them to collection. But if I felt like they were dodging me, there's only so much I can do. I'm not a collections agent. So just remember, every day that your receivables are late it's like an interest-free loan. And so you need to have a plan in place. If you would like help getting your books in order, getting your QuickBooks set up, if you would like help with any part of this process, please feel free to let me know. Comment below or direct message me through YouTube or Facebook. I am excited to work with you, and I would just love to be able to put my expertise to work for you. I take clients from all over the United States, and like I said, I would love to have some clients in Kentucky. I would love to have some clients in Anaheim, California, and I would love to have some in Seattle. So if you're in any of those 3 areas, partly because I like to visit those areas, and so if I have clients there, that makes it so much easier. Have a wonderful evening, y'all. I am going to enjoy our snowstorm here in Utah, and I will be talking to you again soon.